Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. He's the founder and CEO of Overstock.com, Patrick Byrne. Thank you for joining me again.
Great to be on, Jason.
Now, Patrick, there's so much going on in the world. I continue to see these stories about Wall Street corruption. I think there's a new class action lawsuit for Wall Street selling interest rate swaps to these municipalities and pension funds and things like that. And, you know, they've fleeced them. Has Wall Street become more corrupt in the last few decades?
Well, I think I have a two-part answer. Certainly, if you'd asked me 10 years ago, I would have said undoubtedly yes. And I grew up around Wall Street. I was on Wall Street in the 80s. I was there in the early 90s. And when I came back and went public as a CEO in 2002, by 2005, I had discovered really a lot of mischief and thought it was very corrupt. Because of the crash of '08, though, there was a lot more governments. The government, I think, well, I'll put it this way. Now I'm interacting with people at the very top of Wall Street because of this blockchain stuff we're doing. And I've met a number of people who impress me as having gotten the joke that what was going on a decade ago can't go on. And they are concerned that the American people have lost their faith in the capital markets. And there are people at the top of some institutions who seem quite sincere to me about patching the holes and fixing the problems. But they understand there are problems. There are problems. They understand that there are problems, and they're actually honest with me about understanding that there are problems, and they want to tell me that we're going to fix them.
Yeah, if you go back through the history of Wall Street, there tends to be corruption cycles, I guess. So, you know, Wall Street for a while, then it's not as corrupt. There's obviously still scandals, and then things, you know, accelerate to worse and worse, and then it gets cleaned up, and then people become complacent and it's back again. I watched one of your recent presentations, I think it was earlier in 2015, and you talked about, you know, some of the corrupt hedge fund managers and corrupt regulators and things like that. And, you know, we see this stuff going on with high-frequency trading now, how a lot of the regulators just don't really care about high-frequency trading and how it can easily manipulate markets and things like that.
Well, the regulators are always a little bit behind the traders. And you're right, there's like a 7-year cycle. 7-year cycle, somebody gets arrested, ends up in an orange jumpsuit, Wall Street cleans up its act for a little bit. By 6 or 7 years later, it's all been forgotten. And there are edges. The regulations define the edges. And somebody starts putting a toe over the edge and then a foot, and then they're walking over the edge, and then the whole crowd starts doing it. And then the SEC steps in and arrests somebody and makes an example of them. And then they come back in. But the problem is the financialization has gotten so extreme that the regulation doesn't catch up with the reality. And however they write the regulations, some really smart guys are there to say, this is if we do this, this, and this, we can just get around the regulation this way. And we're not, and they're in a gray area. And then they just keep getting worse and worse until they're no longer in a gray area. And then the SEC comes. It's like this 6 or 7 year cycle.
Yeah, and it seems that the industry is writing a lot of the legislation laws, too. I mean, their lobbyists are heavily involved. Like with high-frequency trading, to continue on that example, a lot of the high-frequency trading regulation laws are written by the lobbyists of the high-frequency trading. So it seems like, you know, a revolving door. I live right outside of Washington, D.C., and the one of the former commissioners of the CFTC, which was in charge of, you know, regulating high-frequency trading, now he's a lobbyist for high-frequency trading, and he used to go on CNBC and Bloomberg and stuff and say, you know, how bad it was manipulating markets, and now he's working for the other side. So it's really a head-scratcher to me about all this stuff in the revolving door.
Well, the revolving door is, it's called regulatory capture is the economic term for it, that we set up regulators to protect society from certain industries. And it's the natural order of things. Those regulators come to start working for those industries and start protecting them and start prohibiting new competition. And they work to protect the interests of their client, the entrenched interests of their client industry. So that's a quite common phenomenon that's happened. The first regulator was about 1870. It was the Interstate Commerce Commission, and it's been the story of regulation ever since, that there's this tendency for them to get captured by their industries.
Yeah, that's an interesting point. Although I think, you know, in the long term, markets have to regulate themselves. They have to, but you know, the That's another debate. That's a longer debate about regulation and things like that. I think, longer term markets have to regulate themselves, though. The customer preferences, I mean, you run a retail company. If you guys don't have good reviews, if you guys don't ship out the products on time, and the products aren't what they say, you guys are going to get penalized by the market. So, whether you can't hide behind regulators and things like that, you have to have quality products and services, and you have to do what you say for your customers.
Yes, and I'm normally a real free market guy. I'm a Milton Friedman guy. But in the case of financial products, I'd raise two objections to that. One is when you're buying a typical retail product, you know what it is you're getting. With financial products, they can be so arcane and abstruse, the general public has no idea what it is they're getting. Secondly, because the nature of every financial business is you give me some dollar today, and in the future I'm going to do this other thing for you, but fix your car windshield when you crack it, pay your widow a life annuity, et cetera, et cetera. It's the nature of every financial institution to be like that. Give me something now and I'll give you something later. That it attracts more than its fair share of con men. And so for those two reasons, I don't think that you can. I think that if we didn't have financial regulation, what happened in '08 would be happening every month.
Okay, fair enough. Yeah, there's a lot of products that have been created that shouldn't have been created. But it's moral hazard though when you have a central bank and there's no risk of some of these firms going bankrupt because they know they thought they would get a bailout. So
correct.
It's
it's all about central banking and the moral hazard it creates. You're right.
Yeah, that's where I think the problem really starts. If there wasn't a central bank, I think the behavior of market participants, especially in the financial and banking industry, it would be a lot different, and I think people would take a lot less risk instead of worrying about just their bonuses and blowing up a firm. They would know there would be no bailout coming and jail time and things like that. But I want to transition and talk.
One last quick point on that. You remember
Sure.
Until the 1980s, these big banks and prime brokerages and stuff were partnerships. Goldman, Salomon Brothers, they were partnerships. It's when they started going public and using other people's capital that the real shenanigans got going. But you're right, when it was their own money, they were much more careful.
Exactly. Using other people's money, people tend to take a lot more risks with that. We see that, with the behavior of banks now creating, new derivative products and things like that. I completely agree with that. Now, I want to ask you about blockchain and Wall Street. Are you worried that Wall Street banks are embracing blockchain technology now?
Well, I don't know I'm not worried. I view it as endorsement of something I was saying a year and a half ago. Now that they're embracing it, I'm worried that they're going to try to do to the blockchain what they themselves, and that is capture them, that they're going to get instituted. They see this as a huge competitive threat, the biggest financial innovation since double entry bookkeeping. I mean, they're really getting that joke. And now they understand the threat. What they're doing, it seems to me, is they're trying to slow down progress for other people so they can come up with their own version of the blockchain that they all agree on, and then they're going to get their friends in Washington who they've got on speed dial, whatever senators and congressmen they have on speed dial, they're going to call and get their version of the blockchain recognized as the only legal version, and everyone has to adopt it. So I'm afraid that's what they're going to try to do, is hijack this. And so that's the nature of some of what you see, the backstory on some of what you see in the press about these consortia and stuff that are forming, is they may turn into weapons for, we finally have a great weapon against the oligarchy. The blockchain is a great weapon for the oligarchy to come up with their own version of the blockchain and then say, get Washington to sprinkle holy water on it and say this is the only blockchain that's acceptable and trustworthy and no one can use another one. That would be a disaster.
Yeah, and we're seeing central banks talking about, starting their own digital currencies or moving the currencies to digital currencies and things like that. But one of the things about Wall Street, and I'm sure you have some stories on this if you want to share them, is, when Wall Street finds an exciting new market, they look for ways to either monopolize it or manipulate it or corrupt it so they can get the majority of the profits, directed towards them. So it's not as easy for other people to also profit or benefit off this new technology or market or things like that.
Right. They seek to extract what are called monopolistic rents. Their whole business model is positioning themselves as the middlemen and then extracting rent money just for being positioned correctly. Now, the blockchain suddenly makes them, you don't really need them. You can do all kinds of things that banks do. We can do ourselves on the blockchain. We don't need the banks. And they see it as a huge threat, and they're going to try to find some way to worm themselves into it so that they can then monopolize it and extract monopolistic rents from it.
Yeah, for our listeners not familiar with that term, I think the economic term our listeners can go to Investopedia and look up rent seeking. So that's the economic term where someone doesn't provide any value and they're the middleman, like you said. I guess the analogy is they're kind of like a parasite. So, there's two people, one on each side, providing value in a transaction, in an exchange or something like that, or making a market, and then there's someone in the middle sucking out some of the value that doesn't provide any of the value. They're just like, riding the coattails and a parasite. So that's kind of like how I view a lot of the business model of Wall Street right now, unfortunately, whether that's, high frequency trading, whether they're making a little bit of pennies on each transaction and they're not really providing any extra liquidity. So that seems to be the business model lately for a lot of the Wall Street investing and trading is, rent-seeking type of behavior.
Right. You got it.
Well, Blythe Masters now, she's been accused of manipulating gold and silver markets with paper futures contracts, and she created credit default swaps. So it worries me that, she's getting into the blockchain now and raising all this money. She has a math degree and things like that, but, she's been accused of a lot of corruption stuff. So hopefully the blockchain is able to survive and, they don't use the legal system because obviously, Wall Street has done that in the past. I've seen your speeches where you talk about how, hedge fund managers have used their contacts in the regulatory agencies to get what they want done. Hopefully they don't do that with the blockchain where, they have a set of rules for their own blockchains. And then, the man on the street, the guy on Main Street who says, the blockchain's cool. I don't trust having all my money in fiat currencies. Maybe they have precious metals and other stuff. They don't change the rules where they're not allowed to use Bitcoin and the blockchain or precious metals and things like that.
Well, I think that they're, I'd hate to see that too. I like to think that we're doing our part. First, we're so far ahead of everybody else. I don't know if you just saw the SEC has now sprinkled holy water both on our system and on the offering. It's gone effective. So we can now sell crypto stock through our system. Secondly, they understand that there's lots of other countries who want this, and if the U.S. plays those kinds of games and buckles under to the oligarchs, then I'm going to be on the next flight to Hong Kong. I'm not going to let the oligarchs here stop this. And there's people in Europe, and I'm talking governments and financial institutions who want this technology. There's people in Europe. I had the Minister of Technology of a large Asian country asked to see me and visited me. Another Minister of Technology of another state in South Asia asked to see us. So the U.S. can't, I actually think I can't believe I'm saying this because I was always so critical of the SEC. I think that the SEC and the regulators want to see this happen. They don't want to do a bad job. They know that they have been historically under the thumb of Wall Street. This gives them a chance to get out from under that thumb. This is their solution. We get this thing built. All kinds of things that regulators try to prevent from happening, all kinds of mischief, actually become impossible in the blockchain. It does their job for them. You can't have people double locating on a short locate and things. I mean, all kinds of things happen. Mischief occurs in the world that the regulators try to stop, and a blockchain-based system makes it impossible, makes it easy to stop, and it gives complete audit trail to the feds. So it actually solves the problem for the feds, it solves the problem for the issuers, it solves the problem for the participants in the market. It's not so good for the middlemen of the market who've been using all kinds of tricks that most people don't know about to extract billions of dollars out of your savings account. So it's not good for them, but it's good for everybody else, including the regulators. I think the regulators actually want to see this happen now.
Yeah, Patrick, the mentality in the United States, obviously a lot of people don't like gold and silver. They have a Keynesian background and things like that. Or, they have the Warren Buffett mentality that, it doesn't produce any free cash flow and dividends and things. But it seems that the mentality in the United States is that they embrace technology. So, this is a cool new piece of technology. It can do this and this and this. And new technologies in the United States tend to be more openly embraced than other ideas that don't include technology. That seems my opinion, that this country is very pro-technology, and the regulators and governments and stuff kind of bend over backwards for the technology industry. That's the way things seem to me.
Yep. Good call.
Now, there's been over $300 million invested into either Bitcoin businesses or the blockchain. Do you expect this to continue from Wall Street, Silicon Valley, and corporate America?
I do. In fact, Goldman came out a week ago saying the best place you can invest your money is in blockchain technology. The problem is it's very hard for more money than that to get in. There aren't startups who can take it. A lot of these startups who are giving press announcements and stuff, they don't have any of the tech resources they need. I don't want to name names, but it's very hard getting together the technical teams who can do this kind of work. We have a great team in Utah, and we're always looking for more people. If there's any crypto technologists listen to this broadcast who want a job, please write us. We're developing a nice team here, but the stumbling block for some of these companies in New York is getting the team together who can actually do the work. They can put out the press releases about what they're going to build, but the people who can actually build it are few and far between.
Yeah, that's very interesting. I mean, obviously, there's a lot of skills required in order to build the blockchain and build a Bitcoin-related business. It's not just regular technology people. There's so many more additional skills needed because it's so difficult.
Yeah, I would say that.
Now the governments, whether it's Australia or everyone seems to be looking for Satoshi Nakamoto. I guess there was an attempt to give him an award. I'm not sure if he actually won the award or not. And, in Australia, they claim to have found him because he was trying to buy $80 million worth of gold or something like that. Do you think it's a big deal that people are still looking for Satoshi?
Well, it's the sensational part of the story, that here's this guy who's changed the world and nobody knows who he is. He's like a character out of a Thomas Pynchon novel, more like a Jerzy Kaczynski novel, frankly. But that'll be studied for 100 years. But to me, it's not important. It's not important. If he doesn't want to be known, I think that's his call. I heard from him, by the way. I heard from him a year ago, or a message that I believe, and I had on good authority of somebody who is known to know Satoshi, one of the early people in the Bitcoin movement. And that person said, you're going to be contacted by somebody who is Satoshi Nakamoto. And I heard from such a person. So who knows if it really is Satoshi, but didn't hear anything that would make me think otherwise.
I doubt it was Dorian, though. I doubt it was Dorian Nakamoto.
No.
And anyways, though, we've seen stories come out about Overstock buying gold and food for employees, and, it's a version of prepping. Do you guys expect a financial crisis then in the short to medium term?
Well, expect is a big word. I would say I think there's a 10 to 20% chance of a financial crisis, and it could be much worse than 2008. Could be something that closes the banking system for a couple of weeks, which, remember, is what happened. In the 1930s, Roosevelt ended up closing the banking system for 2 weeks. Couldn't go to a bank. Well, if the credit card industry doesn't work or the banking system is closed, we have, gold and silver coins and food. We can keep 2,000 families trucking along for sort of 30 to 60 days. We could be paying people. And now, if civilization hasn't rebooted by then it's every man for himself. But if so I like to say, if zombies walk the earth, there's nothing I'm going to do about that. We don't store guns or ammo or anything like that. We're assuming that society stays together for some length of time, but if we can't do business, or maybe there's an EMP, something that would prevent us from doing business for 30 days, 60 days. Our systems are robust. We could hold together as a company and survive it, which is kind of funny. I mean, to me, that's kind of a no-brainer. It's just an insurance policy. It's a 10 or 20% likelihood. It costs us very little money. It doesn't really, but I saw that got written about as if it's this really kooky thing. Does it seem really kooky to you?
No, I think it's smart. It's smart to have some type of plan. The world doesn't go according to plan. Human beings like thinking linearly, right? That this is why the 2008 crash happened so bad. A lot of people on Wall Street didn't think housing prices would fall, right? All their stupid computer programs and spreadsheets and formulas said housing prices don't fall this much. And it's always good to have some insurance and be diversified and things like that.
Do you know is it called the Herfindahl Index? It's this Herfindahl Index. Anyways, it was the assumption that underlies how they constructed the mortgage-backed securities, and it assumes, because all that stuff, a lot of finance comes out of statistical mechanics, i.e., from the 1880s. And so if you're talking about two molecules in a liquid or in a gas and they're vibrating, and what are the chances they both go the same direction at once, you can capture that, express that mathematically. But the background assumption is, of course, the molecules don't know about each other. How they vibrate they're on the other sides of the chamber. They don't know anything about each other. It doesn't affect each other. Well, you build that kind of assumption into, if we take a whole bunch of subprime mortgages and we stuff them into one security, well, what are the chances that a guy in Boston defaults on his mortgage, and the guy in Tucson defaults on his, and a guy in Vegas defaults on his, and it assumes those all as independent events. Well, the truth is they're independent until the day you go into a recession, at which point it all co-varies, which means that whole underlying assumption underneath that whole section of the financial industry turned out to be false. Things do co-vary. They're not independent. So that's just the kind of dumb assumption that's woven into the very fabric of our financial system, and which is why Nassim Taleb is correct. They do not understand, the quants don't understand the real amount of risk in the system, because they make these simplifying assumptions, which are right most of the time, but on the days they're wrong. It's like, as Buffett calls it, picking up dimes in front of a steamroller. Most days you make a dime.
Yeah, and when they're wrong, it blows everything up, and then the central banks have to come back in and save everyone and things like that, because the banks are not well capitalized, insurance companies are not properly capitalized. We had AIG selling way too much credit default swaps, and they didn't have any loan loss reserves and things like that. But I don't think they've learned their lesson, because they're doing the same chopped up mortgage-backed security type of things now with new types of with student loan debt and also subprime auto loans. So they're back to creating these new types of structured products that they can chop up and sell. It's just very frustrating to see it start all over again in other things. And I think The Big Short just is coming out this week. It might even be out tomorrow. I read that book from Michael Lewis, and the movie's coming out. Obviously, there's a lot more humor in the movie than in the book. But, Brad Pitt and some of the other actors doing the research, they said basically the housing market's been reinflated, and they're back to the same type of games.
Oh, yeah. Well, it's been, like we say, it's been 7 years. They're on time. It's time for another one. Except I don't think the system's going to take. The system's not nearly as robust as it was in '08. I'm kind of surprised they were able to make '08 not as bad as, not worse than it was, and they did it just by these extraordinary monetary means. But when that comes again, interest rates are already at zero in the U.S. are now 25 bips. In Europe, they're minus 35 bips. It's nothing. They don't have any ammunition. If we go into another recession, which we are, just look at the transportation indices. Look at the manufacturers' indices. We are entering a sharp recession, I think, and they don't have any firepower anymore. They can't. And well, they're going to do QE4. I think they'll do QE4 differently this time when they do it. So all this kabuki dance about them raising their interest rates and that we're approaching liftoff. That's all for the rubes. Nobody believes that of any. Nobody believes. I don't certainly believe that. We're not lifting off anything. And they're going to be reversing that very shortly, bringing it back down, and if not, going right to QE4. And QE4 is going to be, they'll be sticking cash directly in your bank account, which literally is printing money. And I think online there are various papers that have described, I think in Europe they're exploring that more openly, that that's the next way they're going to goose the economy. It's by actually putting money into people's personal accounts. Who knows?
Yeah, I don't think, Patrick, that there ever really was much of a recovery. Now, obviously there was inflation, monetary inflation. The base money, the Federal Reserve and other central banks inflated the base money supply, but that money didn't hit Main Street. There wasn't a lot of money velocity and lending and spending in the economy. Where that money went, though, it went into the asset market. So it inflated the bond market. It kept the bond market prices high. It reinflated the housing prices. It's kept the stock market very high. And, you look at the prices in the art market, diamonds, antiques, things like that. That's where a lot of this excess monetary inflation went. It went into the capital markets first. It didn't hit the real economy as much yet.
Yes, because if you're a bank and you can borrow from the government at 0 and loan back to the government at 230 bips, why are you going to, why are you going to lend the money to a small businessman who's trying to build a strip mall or something, So I think it was all a mechanism in part just to rebuild the balance sheets of these banks that got us in trouble in the first place.
Yep. That's part of the wealth effect. I completely agree. And the money also went, to these hedge fund managers who could borrow at 0 and do yen carry trades and things like that. Those are the ones who have profited off of this. And that's why income inequality, wealth inequality is even more post-2008 because, the Fed tried to print this money and get it, I guess, to like the real economy. And instead it ended up going into the people who could borrow the money cheaply and invest it in more assets. So the rich just got richer instead.
Right.
Well, my next question for you has to do with actually some of this. I know you call yourself a classical liberal. For our listeners out there, that's not the Nancy Pelosi or Hillary Clinton liberal. That's the classical liberal.
I mean, it really is true. It's a liberal. I just came back from Europe, and one thing I love about Europe is they use the word liberal correctly. Liberal. Ron Paul is a liberal. Thomas Jefferson was a liberal. To some extent, deep down, I think Ronald Reagan was a liberal. It's a total misnomer to be calling people like Bernie Sanders or Hillary Clinton liberal. They're not liberal. They're authoritarian. The basic distinction is: are people, are they into authority, or are they into individuals? Should individuals be able to make their own choices, or does some authority or society make it for them? So a true liberal is somebody like Milton Friedman. And so, but since Americans misuse the word so badly, which drives me crazy, it's one of the few things I really like about Europe. One of the few things I like about Europe more than the U.S. is they understand what the word liberal means. And you don't have to constantly be telling people, explaining, look, Hillary Clinton's not liberal. It's the opposite of liberal.
Well, I think it's been done intentionally in a dystopian type of manner where they've hijacked key words. So you have like the Marxists and the Saul Alinsky's and people like that, the progressive is supposed to be like technology and more freedom and things like that. The United States, the real American dream wasn't owning your own house. The real American dream was people coming here for economic opportunity. And then you could, after you succeeded, maybe you could start buying all these things afterwards. So like words like progress and things like that, they were hijacked by political institutions and, the words and definitions and stuff were changed by the politically correct crowd, I guess.
Well, that really where liberal started being used this way was in the 30s when you could no longer sell socialism as socialism. When they couldn't sell socialism as socialism, they started calling it liberalism, which was like the 30s and that.
They rebranded. I'm not surprised. Going back, I read a lot of history, and I'm sure you do too. And the British governments and stuff like that, they had a lot of socialism and things like that. Like their Labor Party used to be called the Socialist Labor Party, and they've removed the word socialist. So it's just clever, the marketing things that all these political parties do to stay in power and adapt a little bit, but they kind of keep the core message the same. My next question for you is along these same lines. You're a CEO, and you kind of think outside the box of a lot of these other CEOs. Why don't more CEOs then embrace Austrian School of Economics or classical liberalism then?
Well, I think they do privately. I think they do behind closed doors, but they understand reality. They're afraid though that it looks kooky, and they don't say it publicly. But behind closed doors, they all get this stuff.
That's interesting. So they want to be more diplomatic, and I guess, they understand that the political system is in charge of, I guess, the favors. So they want to not alienate themselves from either major political party. Is that what you would say then?
Yes. That's a good call.
Yeah, unfortunately, I see way too many, to use an analogy from Atlas Shrugged, I see way too many James Taggarts out there that are willing to, pander to the politicians and the lobbyists and things like that. And it's just really sad that, people aren't willing to stand up and say what's right. And I applaud you for willing to do that and being your own man and, not worrying about upsetting either political party.
Well, it's I wouldn't really know how to, it's nice of you to say that. I honestly wouldn't know how to do it any differently. Is my problem. I wouldn't know how to to do it any differently. Maybe that says a bad thing about me.
I think it's in your nature then, or it's the way you're raised, maybe both. But, you're not politically correct, and I think that's a good thing to be now, because there's a lot of people afraid to speak the truth now because they're afraid of, upsetting someone. In this politically correct society, people are scared to even speak their opinions anymore because, so many stupid labels and things like that.
Thank you.
Now, I want to talk about government control of the Internet. You're an e-commerce business, so you're reliant on sales from the Internet. You don't have any bricks and mortar stores, I don't think, to my knowledge yet. But how worried are you about, government controlling the data and these new Edward Snowden regulations and these new, online government tracking programs like CISA and things that are getting passed? Are you worried the government then's going to start tracking people's purchases and all these other things, and customers are maybe going to curb their online purchases then?
No, not really. Not really. I think that I got to, I don't want the government, reading everything I write and all that stuff. But at the end of the day, I do think there are some crazy national security issues and challenges going on that we've never confronted before. And, society's going to have to figure out what it's willing to live with. It's not going to be like anything we've had to deal with before. So I think that I'm afraid that's going to take having a dirty bomb go off and kill 100,000 people, and then people are going to start saying, well, maybe we can put up with people reading the metadata or who knows what. So it's not, but to me the concern about the government has access to, if you're on telecommunications, I guess I always assume that it's going to be able to be read by somebody.
Yeah, it's becoming just ridiculously dystopian. I mean, obviously there's bad people out there that will hijack any technology, right? And they'll turn like a tool that's not really inherently bad and they'll make it bad. But that the amount of percent of population that's doing that is very low. But it seems like society then pays then for the crimes of a few. It just seems that whether it's gun control or things like that, or what's going on with the internet, there's a small percentage of people out there that want to harm other, like women and children and things, and then everyone in society has to pay a price for that.
Right. Agreed.
Now, I want to, since your business is for discretionary income, although you sell some really everyday things as well, how would you grade the health of the middle class consumer then? Do you think the consumer in Main Street America, the middle class person, do they have a lot of discretionary income still, or are they being a lot more careful then with their purchases and their savings?
They're being a lot more careful. Something happened about 5 months ago, And I think the American consumer is really suffering, and their discretionary income is dropping. And we see it both through analysis of the certain departments on our site and traffic on the internet. There are certain I think that the American consumer is in a real ditch, and I think that the Christmas numbers are going to come out and really disappoint people for the economy in general.
Yeah, I agree. And what we've been seeing also, like with the emails I get, and obviously this is before Christmas, we're recording a couple days before Christmas. I've seen a lot of discounting that normally occurs after Christmas, and it's been pulled forward. So this discounting started occurring weeks ago. So that normally, to me, is a sign that, they're willing to sacrifice the margins for any sales at all, and that's normally a bad sign for the health of the business.
I've been shocked at how empty the stores are. I went once, and people are telling me they go to the mall and they've never seen in their lifetime them so empty as they are.
Well, that's probably a combination of people buying stuff online, right? Obviously, people are buying more online, but do you notice then the overall trend then is the online sales are still down from a couple of years ago then?
No, ours are not. But we see some areas where there is real, and even in online, the real deterioration in traffic to sites that specialize in high-end and disposable income type products. I'm afraid I'm going to have to get off this. I'm a few minutes late for our meeting. Is that okay?
Yeah, I just want to thank you again for your time, Patrick, and please tell our listeners more about T0 so they can find out about it.
Well, T0 is our crypto efforts to bring the blockchain to Wall Street. It's called T0. You can go to the website t0.com, and what it does is it takes the blockchain and takes it into certain back office processes on Wall Street and replaces them. And the neat thing is it prevents a whole bunch of the mischief that's been taking advantage of the public.
That's great. Anything that can make markets more efficient, I'm definitely in favor of. Well, I want to thank you again for your time, Patrick. I want to wish you a Merry Christmas and Happy Holidays, and hopefully Overstock has a great rest of their Christmas season.
Thank you very much, Jason. Fun talking to you. Bye.